Welcome back. You're watching Market Fatafat on ET Now. Let's keep it going with all the stocks that have been buzzing in trade. And now we do have Shivangi Sarda joining in with us from Motilal Oswal Financial Services. Shivangi, very good afternoon. Thank you so much for joining in with us. First stock you've picked out for us is NMDC. In terms of charts and technicals, what's the view on NMDC? Where should one expect it to move from here on?
Thank you so much for having me. And yeah, it's a very good afternoon. We've seen that the bulls are in complete action, so indeed a good one. So talking about the entire space, talking about the sector of NMDC, we've seen a lot of action and buzz from the, yesterday's session itself. And this stock is coming out of its consolidation band after surpassing its hurdle zones. The interesting point here is that a good amount of open interest addition is seen here as we are, heading into the expiry, and rollovers are also adding over here. So expecting a good run up here till the level of 260 odd levels. So this is a stock to watch out for with a stop of 245 zone.
Alright, so that is NMDC that you need to watch out for. Let's talk about Dr. Reddy's and why is that particular counter in focus. Vinny actually addressed it a tad bit, but I'll delve into more details. The reason why Dr. Reddy's is in focus is because Dr. Reddy's and Nestle India will be forming a joint venture to invest in Dr. Reddy's nutraceuticals. This is according to the exchange filing. They announced this particular development just when Nestle was announcing its earnings. They're saying that the partnership will bring together nutritional health solutions, vitamins, minerals, herbals and supplements of Nestle Health Science with the strong and established commercial strengths of Dr. Reddy's in India. The JV is expected to become operational in July to September, and the partnership will help joint venture partners combine their strengths and grow their complementary nutraceuticals portfolios in categories such as metabolic, hospital nutrition, general wellness, women's health and child nutrition for consumers across India. This is what Dr. Reddy said in his release. They also said that in the joint venture, Dr. Reddy's will be holding 51% stake, Nestle India will be holding 49% stake, and Nestle India has a call option to increase the shareholding after 6 years at a fair market value. And even after Nestle India exercises the call option, Dr. Reddy's will continue to hold no less than 40% stake in the joint ventures. On back of this good joint venture coming in with Nestle, the stock at day's highest point, 3% uptick.
Absolutely. The stock at day's highest point. Let's move on. Talk about a real estate name, load our Macrotech Developers. Shesha, we did have some con-call commentary that came in as well. How was that looking like? Because stock is not looking anything exciting.
Well, absolutely. The stock is declining in trade today. It reported its numbers yesterday. Revenue from operations were up 23% on a year-on-year basis. Margins have also expanded at 26% versus 23.7% that the company reported same time last year. FY25 guidance is also very encouraging. So they've given a pre-sales guidance of 17,500 crores versus 14,500 crores that the company reported in FY24. As far as operating cash flow is concerned, that is expected to come in at 6,500 crores in FY25 versus 5,700 crores that the company reported in FY24. We have a couple of brokerage notes that have come in. Morgan Stanley, for instance, they say it was a strong quarter. They are maintaining their equal weight stance with a target price of 1,050. FY24 pre-sales growth of 21% and it is targeting 20% in FY25. Jefferies, meanwhile, has also maintained its buy stance with a target price of 1,380. As such, there were no negatives, but important to note that the stock has already run up quite a bit. The stock, of course, is declining in trade today, down nearly 4.5 to 5%.
Alright, so that is Macrotech. Let's talk about Indian Hotels and Gaurav, another one that's come out with its earnings, and what's it like?
Indian Hotels is another stock which reported decent set of numbers for Q4 FY24. So for example, if you look at revenue, it was up almost 17% on a YY basis. PAT was up 27%. Even if you look at EBITDA margins, they improved to 34.6% versus what it was at 32.9% on a YY basis. Even with this, we also have brokerages. So for example, Investec has now maintained hold rating but has increased the target price to 626 rupees because they believe that the stock is actually chasing the upcycle with the strategic diversification plan, and at the same time they can actually continue to benefit benefit from the strong demand from the sector. Apart from that, we also have Nuvama, who has also recently hiked the target price to 578 rupees versus what it was at 476 rupees, because they also believe that we may see some kind of increase in the stock price, although we could see some volatility in Q1 FY25 because of the potential impact of elections. But if you look at the stock price, it is down 5%. It seems that the street is not taking these numbers on a positive note, but all in all, definitely keeping an eye on this stock, because brokerages are now upgrading their target price for this stock.
Okay, that's the word coming in there from the brokerages. But let's listen in to Puneet Chatwal, Managing Director and CEO of the company, in terms of the targets. What's the outlook going forward, especially given that tourism is picking up?
We feel we are very well positioned with the number of locations, with the diversity of our top line, as well as the kind of portfolio we have divided over leisure destinations, business destinations, and more than 50 spiritual destinations. And we are at almost 14% of our top line is coming through the new businesses, and the projected short term is at 20%. But that is something the management worked upon in the last 5-6 years, is driving operating leverage in our traditional business, in our iconic assets, by implementing and executing on effective asset management and driving margin expansion through the capital light business model. So all in all, I would say if we can maintain more than 15% of the total share of the market, which is in terms of branded supply of rooms is 180,000 rooms, less than 200,000, then we'll continue to drive growth, drive penetration, drive premium results.
All right, so that's the word coming in from Indian hotels. Before I actually talk about the next stock, let's put the spotlight on the markets once again. What a recovery actually coming in for the benchmark indices. 0.8% uptick coming in for Nifty. It's recovered in excess of about 1% from the day's lowest point. There you go, 260 points off the day's lowest point. That is your Nifty index. Let's take a look at what Nifty Bank is doing, and if that is moving in tandem with the benchmark indices. Remember, through the course of the day, it has been hand in hand with the benchmark. Like day's highest 0.7%.
No doubt about Nifty Bank also, right? Because Axis Bank, ICICI, SBI,
SBI.
all these heavyweights are surely managing to pull up in terms of the contribution for the Nifty 50, right? And Reliance is also pulling up its legs and pulling up its stocks. Seems like it. 1% uptick there for Reliance also now. So interesting recovery, right? Look at it, nothing short of marvelous in terms of 1.64% gains there.
Absolutely. So benchmark indices actually now making a good, healthy comeback in the last 1.5 hour of trading session. But let's take a look at what Schneider Electric is doing in trade today, because at one point in time, the stock was trading higher by about 4.6% or so. Last time I checked, that is Schneider Electric for you. Now it's trading higher by about 3% or so. And this is because of the positive comments that have come in from the French parent on their India business. Schneider Electric, in its Q1 results, said that the India business posted double-digit percentage growth helped by capex investment in medium and large size projects. They've said that India ranks third in the size of group's revenue in the energy management business. So the fact that the parent company had good positive comments coming in about the India business, the fact that they are growing well, double-digit growth is being posted. So on back of that, you have Schneider Electric holding on to very strong gains, about 3% as we speak.
That's Schneider Electric, but let's move on and talk about MCX, because this one has been gaining since the last 1 year. There were a bit of ups and downs, but overall the gains for the year or return for an investor wouldn't be bad, because 178% uptick in just last 1 year. Shivangi, from 1,300 levels to 4,000 levels, now where do we expect it to go?
We have seen an excellent price surge in this counter, and in this series, we've seen that the shorts have been completely removed. Over 13% open interest was shed, on the short side. So over and above the counter was all set with the bulls in action. Remarkably, from the last 3 weeks, we've seen good amount of volumes being added over here as well. Its previous hurdle zone, which was 4,000, has been surpassed, and it's holding quite well after above these levels. And in fact, entire broking and exchange related counters are in a lot of buzz and action, and expecting to move even further from these levels. So good amount of price action, and we are expecting that this will continue. towards the next target that we are expecting of around 4,300 for MCX with a stock near 4,070 levels.
All right, so that is MCX for you. Shesha, let's talk about Anant Raj and how were the earnings for this one?
Well, yes, it reported better than expected set of numbers, but the stock has cooled off from the day's highs, absolutely flat as we speak. Revenues came in at 443 crores, which on a year-on-year basis is a strong growth of about 58%. Margins also expanded to 23.5%. As far as profit after tax is concerned, that nearly grew by about 75% on a year-on-year basis. It reported highest ever revenue in the quarter gone by, and remember recently it also reported 4,150 crores of pre-sales for its Gurgaon project. All in all, numbers were largely better than what the street was working with, but as I mentioned, the stock has cooled off, absolutely flat as we speak.
That's Anant Raj for you. Let's move on, talk about AU Small Finance Bank. Gaurav, why is this one in focus?
Well, yes, AU Small Finance Bank also came up with their Q4 numbers, and if you look at the numbers, NIMs were actually a surprise because they declined sharply for the bank. So, for example, net interest income increased almost by 10%. PAT was down 12.6% because now the bank took expenses of 556 crore rupees for the merger with Fincare Small Finance Bank. But if you look at Q4 NIMs, they came up at 5.1%, whereas the Q3 NIMs were standing at 5.5%. That means the fall of 40 bips that we have seen in this quarter. Apart from that, the cost of fund also increased to 7% versus what it was at 6.9%. Now, bank has said that because of the one-time expense, the PAT declined. But if you look at on the positive side, the asset quality actually improved. So, for example, slippage is moderated to 1.8% versus what it was at 2.65%. Gross NPA and net NPA also improved on a quarter-on-quarter basis. And on back of this, we also saw brokerages being a little neutral. So, for example, we saw contract views from the brokerages. So, Nomura actually, while maintaining neutral rating, increased the target price to 625 rupees, while Luama maintained reduced rating and a target price of 530 rupees. All in all, the stock reacted negatively in the day's trade, but definitely let's keep an eye on this stock because we know that recently this this company has now merged with Fincare Small Finance Bank, and benefits may kick off in the quarters coming ahead.
Right, so that's a Small Finance Bank. Shivangi, let's talk about BSC. Is it true that BSC, MCX, CDS will all go hand in hand when it comes to the chart pattern?
Definitely, it goes hand in hand. And also talking about the investor sentiments, of course, we're seeing market at life highs. Markets at record highs, and sentiments of people are also improving. So definitely, all sentiments as well as technical charts go hand in hand. Even the derivative setup is quite positive. Now talking about BSE, we've seen that it has, come out of its 13-day consolidation, and very strong follow-up action can be seen thereafter. So a good amount of volumes that are being added over here will add to the stock in the momentum. And we are looking at 3,300 as the next targets for this stock, 3,100 being as a crucial support levels. Overall, we've seen that on a month-on-month basis also, the stock has been consistently moving and has been a performer of the year as well, with 50% price rise this year so far.
Okay, surely keeping an eye out on BSC. Let's move on and talk about HUL. HUL reported its numbers, slight bit of a miss that came in on the volume growth front, and that was something that didn't excite the street yesterday and today. That's why, that subduedness is what we're seeing for HUL as well. Now, other than that, what we should watch out for is in terms of what the brokerages are also saying for HUL. Goldman Sachs is maintaining their neutral rating, cut the target price to 2,475 rupees from previous target price of 2,550 rupees. They said that their weak performance continued. There was deterioration in soaps, which became more concerning. Sharp deterioration in the soap business is something that's concerned, and they expect recovery only after a few quarters. Near term is likely muted in terms of the trend that one is expecting. Though HUL continues to invest in premium products, the management also said that they are focusing on getting back that volume growth of 4 to 5% as well. So yes, keeping an eye out on HUL. Today, as of now, recovered from the day's low spend, but still holding on to cuts of 1% as of now.
All right, that's HUL for you. Shivangi, let's talk about Bharat Dynamics, and how is this one looking on the charts to you, given the fact that defense counters have had a run of their own. They did see a correction when the rest of the PSU pack also was seeing some sort of corrections creep in. But what's your take coming on Bharat Dynamics? Spectacular returns over the last 6 months.
See, the defense space has been in a lot of action recently. If we talk about HAL and now it's BDL, this stock has consistently, performed in the last, around about 18 weeks. Now, after this resiliently holding on to its higher zones, now the stock is coming out with good amount of price volume surge, and RSI is showing a positive divergence here, which ensures that the stock is set for a next leg of rally as well. So very strong, on the chart setup, and we are expecting 2150 next on the cards for this stock, with a support of 2020 levels.
Okay, let's move on to the next stock. And Ashesha, Vedanta, why have you picked out this one? What's the news flow here today?
We're reporting its numbers post market hours today, and we are expecting stable set of numbers on a sequential basis. Revenues are expected to come in at about 34,100 crores, a marginal decline of 4% sequentially. Margins, meanwhile, are expected to come in at 24.8% versus 23.8% that the company had reported in the previous quarter. Remember, commodity prices were on the lower side on a sequential basis, and that is expected to weigh on realizations. Aluminium prices were flat, but zinc and lead prices declined 1 and 2% respectively sequentially, and hence that will weigh on EBITDA per ton and realizations this quarter. Higher volumes are expected to come in from the zinc segment, which will be partially offset by lower commodity prices and lower cost of production in aluminium segment. The company will also be conducting its con call and management commentary with respect to timeline for its demerger, capex plans, and debt repayment plan for its parent company Vedanta Resources will also be crucial. But all in all, we are expecting stable quarter on a sequential basis for Vedanta this time, and the stock is doing absolutely nothing ahead of its results.
Alright, so that is about Vedanta then, but with that we slip into a break on this edition of Market Fatafat. More on the other side, don't go anywhere. Welcome back, you are watching Market Fatafat, and let's talk about Sobha Developers. And Shivangi, how is this one looking to you on the chart, Sobha Developers, because given the fact that all the realty stocks have had their fair share of rally?
Yes, absolutely. So talking about the other realty stocks as well, this stock is yet to move right now, and we've seen that on the longer time frame, this stock has made a sort of a pole and flag pattern formation on the monthly frame, and is now getting ready for the next move. Now, talking about the week-on-week basis, this stock is consistently moving higher, which means that any small declines are being utilized for buying. The stock is trading above its key daily exponential moving averages, and good buying interest is seen over here. Now, of course, reality space is moving in a consolidation, but the good part is that it is holding on to its higher zones. And despite the market volatility, in the last 3 to 4 weeks, we've seen that these stocks comparatively have held on resiliently. So quite strong, and this stock is set to touch 1800 levels very soon, with a stop near 1710 levels.
Okay, let's move on to the next stock. And Gaurav, RVNL, why have you picked out this one today? Is there one more order win? What is the reason for RVNL today?
Actually, for RVNL, there is not just one order, but there are two orders where the RVNL is selected as a lowest bidder. So, for example, the first order is from the Southern Railway for automatic block signaling system. This order is executable in 900 days, and the total value of the order is going to be around 239 crore rupees. Apart from that, the company's JV has also emerged as a lowest bidder in redevelopment of Thiruvananthapuram Central Railway Station in EPC mode, and RVNL owns almost 51% stake in this JV. Now, the work period for this order is going to be 42 months, and the value of the order is going to be around 439 crore rupees. Now, coming back to the stock price, it has reacted positively. It is up 1.22%, but let's not forget that in the year itself, in the year 2024, this stock has given more than 58% returns to the investors, and it is still away from its 52-week high level. So definitely we may see some further upside coming up in the stock, given that the new orders have come to the company, and because of that we will definitely watch out for this stock, because some positive momentum may still come in this stock.
All right, so that is RVNL for you. Let's talk about Sterlite Tech, and the reason why this particular counter is in focus is because of unveiling of a new product. Last time I checked, the stock was trading higher by 6.3%. Now it's given up some of its gains, trading higher by about 3.3% as of now. The company, which is a data network tech company, it's unveiled a US-made fiber optic solution. So on back of this unveiling of this particular product, the stock has seen good gains. In fact, it's gaining for a fourth consecutive session. So that's Sterlite Tech for you. That has a lot of things working in its favor. That entire fundraise also happened, and now this new product launch is aiding the company.
Absolutely, keeping an eye out on that. Let's move on, talk about Zomato. Shivangi, this one has been, buzzing away in trade for the last 1 year. But yes, there's a lot of news flow coming in terms of platform fee hikes. Swiggy said about, got the SEBI nod for its shareholder nod for its IPO as well. So yes, that's going to be coming out. We'll be seeing Swiggy. How are you seeing Zomato now? Increasing competition, at least in the listed space, is something that one should watch out for?
Yes, absolutely. But talking about the listed company that we have here, Zomato, and also the IPL in full action, along with the heat, so everybody's going to stay in and order their food. So looking at the overall environmental structure, also this stock looks quite positive. And we've seen that technically speaking, the stock has retraced to its key level of the recent swing high from round about 144 to 195 odd levels. So this swing has been important, and now the stock is now getting ready for a good upswing, even higher. And we've recently seen that the volumes are steadily increasing, which means that there is a good base formation as well. So definitely the stock is all set for 195 and then 200 odd levels, with a crucial support of 180 zones.
All right, so that is the take coming in on that particular counter. But on that note, thank you so much, Shivangi, as well as Ashish, for joining us on the show, and also Ashish and Gaurav for sharing telling our viewers which stocks are in focus. But there's another stock that is in focus, and that has to be Happiest Minds, Vinny. They have actually gone ahead and announced a new acquisition, and we have the management of the company joining us. We have Mr. Venkataraman Narayanan, I beg your pardon, who's the MD and CFO at Happiest Minds, joining us on the show. A very good afternoon to you, sir. Thank you so much for joining us on ET Now. And firstly, let's talk about their acquisition, Pure Software Technologies. If you could tell us, how does this actually augment your business?
This acquisition is a culmination of, I would say, close to a year's effort. It's a year-long effort. I'm not talking about specifically Pure Software here, but we had raised capital in July of last year, and we have been on the lookout for companies to acquire and integrate with Happiest Minds from then on, in fact, even before. And we were looking for meaningful acquisitions which really, made a change to the verticalized approach that we have to business, and also one which will bring in a similar or a set of culture which will go along with us. So, we have been talking quite a bit about this in our past interactions. Finally, the culmination of a long-term effort is what I would say hopefully the first of a list of acquisitions that we will make in due course.
Right, a few days back, you had also announced one other small acquisition that was there. Could you give us more details on that, and how big can that become for you?
Yes, that was a very niche acquisition. There we acquired a company called Macmillan Learning. Macmillan is a global leader in the education space. And as you know, we are very strong in that vertical. So this was a case of one of the offshore development centers of Macmillan Learning in Bangalore, which we acquired, and now we have become a partner of choice for them. We were already working with them. They trusted us with this ODC, or offshore development center, that we had, and that was acquired by us. And now we are looking to grow larger into the edutech segment of Macmillan completely. Just to add, Pure Software brings in key strengths in the two verticals of BFSI and healthcare. These are two focus verticals for us. if you look at it broadly, 50-50 is a split of how pure software would break up into these two verticals. They've got some bit of business coming from gaming, but if you were to look, the large two verticals are BFSI and healthcare, and they nicely align with what we have also been trying to build over the last few years.
Right. Also, sir, your revenue of pure software, if you look at it in the fiscal 2024, it was around 351 crore rupees. But what kind of growth rate are you envisaging going ahead for it?
Let me hold on to the growth path, but because, we are in a silent period right now, we would like to add that to our overall growth expectation that we will set for the next year after the first quarter results or during the next couple of quarters. But suffice to say, it's a fast-paced, fast-growing company. And the targets that they have set for themselves in conjunction with us is quite aggressive, and they are quite confident of meeting them. So if you look at the way the purchase consideration is split, it's based on, there is an upfront element and there is a deferred consideration, which is based on set targets. And those targets are essentially top line growth and also profitability growth.
What we also want to just understand is that the 1,200 employees of PureSoft, will you be taking all on board or will there be some churning?
The company is very well run. It has been there for quite a bit of time. 18 years is what they have spent in building the company. So it would be very important to get the 1,200 people integrated into the Happiest Minds family, while also giving the people who run that business enough amount of freedom to ensure that they are able to grow. And, they have taken on targets which we should together try to achieve. So there's going to be quite a bit of, work ahead of us in integrating it in a manner that 1 + 1 is more than 2. It has to be 3. Then that's when, the real benefits of an acquisition starts happening. So here you have to look at all our past acquisitions. We have brought in people. We have not done any of the people reduction. It's been put them to attaining that objective of $1 billion by 2031. So we are all now becoming part of that, shared objective.
So thank you so much for joining us on ET Now to talk about this latest acquisition of Happiest Minds. And with that, we are actually totally out of time on this edition of Market Fatafat. Thank you so much for watching. Stay tuned. Closing trades coming up next.
If you like this video, then like, share and subscribe to ET Now.